Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm starting the problems on assessment of individuals. Last video I have explained you complete theory regarding how to assess, how to compute the total income of an individual. I have explained you in detail. So if you have not watched that video, I suggest you to go to the playlist of my channel. Select the subject advanced aspect of income tax. Watch the video on assessment of individual. Then you can watch this video because the problems are based on the theory, on the provisions. Until and unless you are sure, you are perfect on the provisions of Income Tax Act 1961, you cannot solve any problem. So give more concentration on understanding the theory which I have given. Not only the last video, but also you have to go through to watch the video on deductions from GTI and computation of income from other sources, computation of PGBP. All these are interrelated topics. Without understanding the previous videos, you cannot understand this problem. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So always before watching the problems videos, you must have a hard copy. Now take a screenshot of the first two problems on assessment of individual. Then I'll explain each and every point. Come on viewers, now I am starting the first problem. Mr. Srinivas submitted his particulars of income and payments for the previous year 2020-21. The previous year is 2021 and the assessment year is 21-22. Compute total income and tax liability for the assessment year 21-22. So we are required to compute the total income as well as tax liability. Now see the problem. Income from salary 5,74,400. Income from house property let out 18,300. Loss from house property self-occupied 4,000. So intra-head set off. Intra-head set off. Within the same head, income from house property, there is income from one let out house and loss from self-occupied house. So we can deduct the loss from self-occupied house from the income of the let out house. So 18,300 is the income from let out house and 4,000 is the loss from self-occupied house. 4,000 can be deducted from 18,300. Income from other sources 68,800. Qualified savings. Qualified savings deduction will be given under section 80C. Maximum deduction is 1,50,000. Here the qualified savings are 1,12,000. So fully allowed as deduction. Medical insurance premium 16,000. So medical insurance premium is allowed up to a maximum of 25,000. Here it is 16,000 allowed. Interest on higher education loan 19,500. Deduction under section 80E. That is fully allowed. Whatever interest paid on higher education loan fully allowed as deduction. So I have explained you. Three deductions are there under section 80. Deduction under section 80C, qualified saving. Deduction under section 80D, medical insurance premium. Deduction under section 80E, interest on higher education loan. That's it. Now the solution for this problem is computation of total income of Srinivas for the assessment year 21-22. Income from salary 5,74,400 directly given. Income from house property, income from let out houses 18,300. Then loss from self-occupied house can be deducted. So 18,300 minus 4,000, 14,300 is the income from house property. So we have income from salary, we have income from house property. Then income from other sources 68,800 directly we have taken. Now take the total gross total income. GTI is 6,57,500. 6,57,500 is the GTI, gross total income. From this, deductions are allowed under section 80. So one by one deduction. First deduction under section 80C, qualified saving 1,12,000 directly given in the problem. Remember, these points you have to write in working note. I'm not writing working note. I'm just explaining and writing the final answer. Solution I'm putting on the board. But always when you watch the video, keep a notebook beside you. And whatever I'm explaining the provisions, note it down. Then only you can remember. Otherwise, simply if you watch the video, if you listen the lecture, you will not gain any knowledge. Always keep a notebook. So I'm explaining you, for qualified saving, deduction under section 80C is allowed up to a maximum of 1,50,000. Here it is 1,12,000 allowed. Medical insurance premium, deduction under section 80D, medical insurance premium, maximum deduction is 25,000, but here it is 16,000, so fully allowed. Next, deduction under section 80E, this is for interest on higher education loan. If the SSC has taken a loan for higher education and interest is paid, then deduction under section 80E is allowed. No limit. Whatever amount of interest is paid, that is fully allowed. So here interest on loan paid is 19,500, fully allowed. All these points which I am explaining, in examination you have to write in working notes. In working notes you should write down deduction under section 80E, interest on higher education loan, fully allowed. Deduction under section 80D, medical insurance premium up to 25,000. Qualified saving under section 80C up to 1,50,000. So here take the total of the deduction 1,47,500. These are the total deduction under section 80. Deduct 6,57,500 is the GTI, gross total income, minus all deduction under section 80 is 1,47,500. So total income is 5,10,000. That's it. It is asking you to calculate total income. We have calculated. Now it is asking you to calculate tax liability. If nothing is given, we assume the SSC is a non-senior citizen. For non-senior citizen, the basic exemption is 2,50,000. So here computation of tax liability. Slab. First slab up to 2,50,000, income 2,50,000, nil, no tax. From 2,50,000 1 to 5 lakh, second slab, the income comes to 2,50,000, 5% tax, 12,500. The next slab goes from 5 lakh 1 to 10 lakh rupees. But is our income going up to 10 lakh? No. Our income is only 5,10,000 only. So we'll take the balance. The total income is 5,10,000 minus 2,50,000 minus 2,50,000. The remaining balance is 10,000. On this 20% is the tax. So 10,000 into 20%, 2,000 is the tax. Now add up. 12,500 plus 2,000, 14,500 is the tax on total income. Tax on total income 14,500. From this, deduct tax rebate under section 87A. But the SSC will not get the tax rebate because the total income is more than 5 lakh. The tax rebate will be given if the income is up to 5 lakh. Exactly up to 5 lakh tax rebate. Over 5 lakh rupees, no tax rebate. So nil. 14,500. Health and education says as usual 4% of 14,500, 580. So tax liability is 15,080. That's it. This is the first problem on assessment of individual, computation of total income and tax liability. The second problem, Sri Sunil Varma is a practicing chartered accountant. The following particulars are related to the previous year 2021. Compute total income and tax liability. Exactly same way. We have to compute the total income and tax liability. The income from profession 18,32,000. See here, this problem is little bit complicated. A number of new points are there. So always note down whatever I am explaining. Make a note of it. Then only you can remember. Computation of total income of Sri Sunil Varma for the assessment year 21-22. Income from profession 18,32,000 directly given in the problem. No adjustment, nothing. Now, short-term capital gain on sale of equity shares. Short-term capital gain on sale of gold ornaments. Long-term capital gain on sale of building. Long-term capital gain on sale of shares 1,20,000. Here a little bit complications are there. See here. For the purpose of computing the total income, we should include all capital gain, short-term capital gain, long-term capital gain, but the income tax provisions are different regarding short-term and long-term. Later on, when we calculate the tax liability, we separate. But for computing the total income, we include all capital gains, whether it is short-term capital gain or long-term capital gain. Later, after computing total income, I'll explain you about the tax liability of different types of capital gains. Right now, we include everything. So capital gain, short-term capital gain on equity share 1,30,000 given in the problem. Short-term capital gain on sale of gold ornaments 78,000 directly we have taken. Long-term capital gain on sale of building 16 lakh. Then long-term capital gain on sale of shares 1,20,000. All capital gains I have taken, short-term as well as long-term. But remember, the tax liability provisions are different for different types of capital gain. That I'll explain later. The total of capital gain are 19,28,000 is the total of capital gain. Now next one is income from other sources. Income from other sources, only one income is there, interest on bank deposit. It is not given whether it is a saving bank deposit or other bank deposit. Nothing is given. If it is given interest on saving bank deposit, then deduction would have been given under section 80 TTA. So under section 80 TTA, deduction will be given only if interest is there on saving bank. If nothing is given, deduction will not be allowed under section 80 TTA because we don't know which type of account it is. So interest on bank deposit directly will take 15,000, fully taxable under income from other sources. Now take the total. 18,32,000 plus 19,28,000 plus 15,000. The gross total income GTI 37,75,000. This is the gross total income. From this, now we start the deductions under section 80. Deductions under section 80. First of all, deduction under section 80C. First, deduction under section 80C. For what it is? Qualified saving. In our problem, two qualified savings are given. One, deposit in PPF, Public Provident Fund. It is given. See here. 7th point, 8th point. His contribution to PPF 60,000. So any contribution to Public Provident Fund is a qualified saving under section 80C. So here 60,000 I have taken. Secondly, last item, deposit in Sukanya Samriddhi Yojana account for 3-year daughter. 42,000 in Bank of India. Deposit in SSA, Sukanya Samriddhi account. That will also qualify for deduction under section 80C, qualified saving. So this 42,000. So 60,000 deposited in PPF, 42,000 contributed in SSA, Sukanya Samriddhi account, 42,000. Add up 60 plus 42, 1,02,000 is the qualified saving under section 80C. That's it. Next, deduction under section 80D. It is given medical insurance premium. It is given payment made for mediclaim policy on his life and wife, 17,000. So, amount deposited for mediclaim policy, medical insurance, that will qualify up to 25,000. Here it is 17,000 allowed. Then deduction under section 80E. This is for interest on loan taken for higher education. So here it is given repayment of son's higher education loan rupees 1,20,000 including interest 18,000. So 18,000 rupees is the interest on loan taken for higher education. So 18,000 will be allowed as deduction under section 80E. So 80E, 18,000. Now deduction under section 80G for donations. 80G is allowed for donations. Here it is given, second last point, Donation to Prime Minister's National Relief Fund 21,000. Deduction rate is 100%. Donation made to Prime Minister's National Relief Fund. It's a no limit donation and 100% is the rate. No limit donation, whatever donation given fully qualifies, and the rate of deduction is also 100% for Prime Minister's National Relief Fund. So how much is donated? 21,000 is the donation given. Full 21,000 is allowed. In examination, whatever I am explaining about these deductions, you have to write in working note. Otherwise, simply if you write the solution, you will not get the full marks. I am not explaining because the board is not sufficient to write all the notes. But whatever I am explaining, keep it in a notebook and write it down, all the points. In examination, you must write. Then total income comes to 36,71,000. But this 36,71,000 is the total income, that is normal income as well as special income. Normal income means the income on which slab system will apply. Different slabs, 5%, 20%, 30% will apply. Whereas special income, a flat rate will be applied. So what are the special incomes? We have to segregate. From this total income, we have to separate how much is the normal income and how much are the special incomes. Now here I am segregating. Total income is 36,17,000. 36,17,000 is the total income, from which I am deducting special incomes. The first special income is short-term capital gain on equity shares. The Income Tax Act has made a provision that if there is a short-term capital gain on sale of equity shares in a recognized stock exchange on which STT is paid, security transaction tax is paid, the rate of tax is flat rate 15%. Write it down there itself. Any short-term capital gain on sale of equity shares in a recognized stock exchange on which STT is paid, security transaction tax is paid, the tax rate is flat 15%. So I am deducting from here because there is a separate tax. So I am deducting 1,20,000 bracket means minus. Second, long-term capital gain on sale of building. Any long-term capital gain is taxable at a flat rate of 20%. So this is also a special income. So I am removing this one also. So 16 lakh rupees is the long-term capital gain on sale of building. Deduct. Thirdly, long-term capital gain on sale of shares. So Income Tax Act says if there is a long-term capital gain on sale of equity shares in a recognized stock exchange, up to 1 lakh rupees is exempted. LTCG on shares up to 1 lakh rupees exempted. Over 1 lakh rupees is taxable at a flat rate of 10%. At a flat rate of 10%. So again this 1,20,000 is a special income on which there is a flat rate of 10%. So deduct. So 1,20,000 also I am deducting. One more is there. Short-term capital gain on sale of gold ornaments. There is no flat rate. That short-term capital gain on sale of gold ornaments is taxable along with other incomes at slab system. At a slab system. So I am not deducting. So short-term capital gain on sale of gold ornaments is normal income on which slab system will apply. So I am not deducting. Ultimately normal income comes to 17,67,000. So deduct 36,17,000 minus 1,30,000 minus 16 lakh minus 1,20,000. So 17,60,000 is 67,000 is the normal income on which slab system will apply. So first we calculate the tax on normal income. Tax on normal income, slab income rate tax up to 2,50,000, income 250 nil. Second slab 2,50,000, 1 to 5 lakh, income is 2,50,000, 5%, 12,500. The third slab is 5 lakh, 1 to 10 lakh. 5 lakh is the income, 20%. Excess over 10 lakh. Over 10 lakh, 30%. So how to find out over 10 lakh? Total income is 17,67,000. From 17,67,000, deduct the first two. First three. 2,50,000, 2,50,000, 5 lakh. So if you add up the first three, 10 lakh. So 17 lakh 67,000 minus 10 lakh. So 7 lakh 67,000 is the balance on which 30% is the tax. So 30% of 7 lakh 67, 2 lakh 30,100. 2 lakh 30,100 is the tax. Now you add up 12,500 plus 1 lakh plus 2 lakh 30,100, 3 lakh 42,600 is the tax on normal income. So this is the tax on normal income, 342,600. To this we add tax on STCG, short-term capital gain on equity shares. How much is the short-term capital gain on equity shares? 1,30,000. And the rate of tax, I already told you, 15% flat. So here 15%, 1,30,000, 19,500 over special income tax. Next one, long-term capital gain on sale of building, 16 lakh. Long-term capital gain on sale of building, 16 lakh. It's a special income. The flat rate of tax, 20%. 20% on 16 lakh comes to 3,20,000 is the tax on LTCG. Last one, long-term capital gain on sale of shares. Long-term capital gain on sale of shares. Equity shares. Just now I told you up to 1 lakh rupees exempted, no tax. Over 1 lakh rupees, 10% is the rate of tax. That is the provision. Already all these provisions I have explained in the last video. That's why I am saying again and again, if you want the perfect knowledge, watch the first video and then come to here. Now, 1,20,000 is the long-term capital gain on sale of equity shares. From 1,20,000 deduct 1 lakh because exempted 1 lakh. So 1 lakh minus the remaining 20,000. So 10% of 20,000 is 2,000. That's all. These are the tax on special incomes. Now you add up all the tax. Tax on normal income 342,600 plus 19,500 plus 3,20,000 plus 2,000. 6,84,100 is the total tax on which health and education says 4%. So 4% health, 4% of 6,84,100, 27,364. Add up tax liabilities 7,11,464. 7,11,464 rounded off to the nearest 10 rupees. So last you are having 64. So make it 60 rupees. If it is 5 rupee or more, then we would have taken 70. But less than 5 rupee, ignore 4 rupees. So 60. So 7,11,460 is the tax liability. Here we have not charged the surcharge. Surcharge will be applied only if the total income is more than 50 lakh. Here the total income is not more than 50 lakh. It is less than 50 lakh. So surcharge is not applied. That's it. So in this video, I have explained you two problems. First and second problem on assessment of individuals. So if you are really interested in learning the income tax subject, you must have the patience. First attempt itself, you may not be able to understand all the provisions. Watch the video 2 times, 3 times, definitely you can enjoy learning the subject income tax. Inshallah, we'll continue the next problem in the next video.